smells good in here.
It's Friday. I'm here for the showdown.
Which accountant is your favorite?
That's a tough question.
Fahey or Broman?
I feel like I have some Fahey loyalty.
Right.
Just because he's
right.
He's been here.
He's been the guy.
But Broman, he's looking pretty strong.
Broman's a contender.
There he is.
There he is. He's a contender.
Go with Fahey.
He's humble too.
We have 2 accounts. Because why have one?
When you have so much money as we do,
Right.
we need 2 accounts.
Right. I mean, you get 2.
I don't know what to say.
It's better than 1.
2, usually.
Most people, they'll turbo tax it. Whatever they call H&R block. When should people start getting professional advice?
When they need help. I mean, I don't know.
Let's say I didn't know how to change oil on a car, which of course I do. Broman knows how to change oil on a car.
He does, yeah.
No, he doesn't. Never done it.
Hey, what's up, Ed? You come in. Ed does not change the oil on his car.
I don't.
Do you know how to without reference material?
No.
I'm confident that Ed, with YouTube, could change the oil on his car.
No doubt.
Right?
Yes.
I don't know if that's true with taxes. Fun fact, and this is because of the accountants, who I kind of think are kind of bad guys in a way. I don't want you to take this the wrong way. Lawyers, like everything.
It's not that they're bad, it's just that they're kind of parasites, right?
Ooh.
God.
You're one of the good ones. Pets and babies are also parasites, so
Yeah.
you're gonna rule.
I get it. I get it. Yeah.
Whoa. Oh, parasite number 2. It gets bigger every year.
No.
I'll let you guys do your thing.
Oh, is this the furl return or is this just like an amendment?
The return was over 800 pages.
What is this? The Cliff Notes? This is the summary. What is this?
These are authorization forms. There was a couple of filings that have to be done by paper.
You're not kidding. It's 800 pages?
It's over 800 pages.
It's over 800 pages.
Yeah.
You don't send them a file box. You just email them a document.
Right. I electronically file it through our software. We could. You can still file by paper. You could send in all that stuff, but it's better electronically because they process it.
If we decided, just walk into the IRS, just drop them a file box and a manila envelope with some cash to cover it. Right.
Yeah.
Whatever the tax liability is, they would have to do it.
Yeah.
They would have to have some person go through and I guess copy it into their computer
They
system.
send a box to each different state.
Oh.
Pennsylvania, California.
What?
Some of the states, unfortunately, don't allow the net operating loss carry forward. This idea, let's say,
Does that make any sense to you, Matt?
No.
That makes no sense to me.
so what that means is you lost money, right, in 2021. In 2022, you made money. So the idea was, well, we'll roll forward that loss to offset like you can on the federal. Right? Some of the states don't allow that.
What?
For example, Pennsylvania.
Fucking
Fortunately does.
Dutch.
But most of them don't.
We lost a bunch of money. Losses in business can offset profits later on. So it's like a tax shield,
Yeah.
right? If you get losses, if I lost $1,000 in business, well, the next $1,000 of profit, it just balances out. It's not real profit. Got to balance out that loss before it's
Right.
actually profit. So we had a bunch of losses in 2021, and now some of the states are saying we actually are not going to recognize those previous losses.
Mm-hmm.
We're only going to recognize the current and future profit. So
So you're screwed with that. Yeah. It's really messed up.
we'll send them a paper filing.
Yeah.
Anyway, what we were talking about, we now have 2 accountants.
Yeah.
How lucky are we?
Yes. That's the way it should be.
You're a tax accountant.
Yeah.
So what do you call yourself? Like, what's the name for this?
Evidently a parasite. I'm here to help, to give you information to help you better make decisions. That's all I do.
Your job is to just simply minimize tax liability.
Yeah.
Is that fair?
That's fair. I mean, so what Steve's doing is a day-to-day accounting.
This is what's weird. This is what's really interesting. When Steve looks at certain things, he will classify those payments certain ways. But then the government, according to GAAP rules,
Yeah.
The elders.
the elders.
Sorry.
I like that. Take an equipment purchase. Okay, we spent $100,000 on this piece of equipment. And we say, it's gonna last 10 years. So we're gonna expense it $10,000 a year for 10 years. And then the idea is after 10 years, we're gonna have to go buy a new piece of equipment. Okay, that's depreciation and that's something that you are managing.
So there's a few misstatements there.
God damn it, every time.
That doesn't,
Go ahead, please.
Well, that
please.
doesn't mean we have to buy something new at the end of 10 years.
Well, that's true.
Okay.
But if we were really, really good at estimation,
Yeah.
then theoretically that should be pretty close.
Okay.
We're not good at estimation.
The government gives you the standards to use.
For tax purposes.
Yeah.
Oh, see, this is where talking about.
Pretty well known that you use equipment is 5 years and furniture is 7 and that kind of stuff. But
That's what I was talking about. It's
yeah, but there's it's not a different set of books though.
The government, when the government looks at that equipment purchase, it understands it and classifies it differently.
Well, we get to write it right off, as depreciation.
So why is it, hi there, do you like taxes?
No, I hate them.
All right, so you buy the equipment, they write it off for 100 grand on the tax return. For GAAP, what they're saying is that piece of equipment does last 10 years, so we have to write it off over the 10 years.
Sure.
You're not gonna get that big expense in that year. So if you're looking at a financial statement, the income's gonna be higher because the depreciation is less.
So when it comes, by the way, and this is what's interesting, it's actually backwards of what you'd think with depreciation. When the government is allowing you to depreciate the equipment more rapidly, basically instantaneously, it is actually, that's a tax benefit.
All taxes are political, so this was political too, because what they wanted was, after the slowdown, after I think it was 9/11, they wanted people to reinvest in equipment. And so they put these accelerated depreciations into play. You can buy that piece of equipment for 100 grand, it'll knock your taxable income to 0. Isn't that great? Yeah, I'll go out and buy that.
Sure.
As opposed to, well, it's gonna knock your income down by 10 grand. I don't know if I want to put out that money right now. So it was really an incentive to get people buying.
So like our internal concept of profit doesn't match what we're submitting to the government. And that, by the way, that's all legal. That's actually how it's supposed to be done.
Yeah, absolutely.
But isn't that weird?
Well, it is. It was for political reasons, so it's like, that's why they did it.
What?
So how are the financials looking these days? I know you came up with some figures. You mentioned that
Free to say?
Oh yeah.
We're about a break even right now.
about break even?
Yeah.
And I'm actually pleased by that result. So we currently have between $2.5 and $3 million of MSRP as valued by MSRP. Stuff that's, we've sold it, we've built it, and it's just waiting for like little last things. Our finished inventory in Pennsylvania has surged.
Oh.
I was afraid we were gonna be bleeding out money. So we're sort of breaking even, and yeah, we will see. Yeah, we have to I think these next few months.
Because that loss was not able to be brought forward with all the states, the amounts due with different states here that are going to have to be paid, it totals about $66,000.
So the company for 2022 owes $66,000 in taxes.
Right.
California is saying we owe them $825.
Yeah.
Colorado wants $5,365. Illinois wants $1,000.
Yeah.
Kentucky.
Yeah.
Fuck.
That looks like a state minimum tax.
What's a state minimum tax?
Here's a minimum fee just for filing in our state.
Okay.
California, that's $800. Massachusetts, $456.
For you to have the privilege of paying the state of California taxes, off the bat is $800.
Yeah.
Never mind then the tax you
That's
owe.
the minimum.
What you're referring to, I think, is the payment to the Secretary of State. So you pay the Secretary of State, they say, okay, you can do businesses in here, and even if you have a loss, you got the state minimum tax of $825.
So you have to pay money even though you lost money.
Yeah. So like this PA tax of $26,000.
Matt is glazing over right now. You can't.
I don't understand how every time we have this conversation, we find out something new that's just more ridiculous. Like, I figured we would have heard it all by now, but no.
We haven't reached the bottom. We're still digging.
It's a monster in motion. It's insane. It really is. These states are changing the regulations all the time. All the time.
And by the way, and this is just to be clear for any viewers we have left. There are S corps, and C corps, and DBA, LLCs. So my understanding is these are all legal structures.
Yes.
Each one has different tax consequences. The way you organize your company has a lot of tax implication.
Yeah, I mean, isn't it the same as like a single person you filed single or married or like
Right.
individual?
Well, no, that's the same idea. There's, I believe, and you would know this better than like if I do single and my wife does single versus if we go together and do joint.
Right.
There's tax consequences.
Yeah.
Actually, what should people do?
Joint.
Do it, find someone.
Ring.
That's what that was.
Thank you. Hey, can you file jointly if you're not married?
No.
You have to be legally married in order to file joint.
Yeah.
What happens if we're estranged? What happens if I'm getting a divorce?
You're still married, you're still married.
Your tax status is determined on the last day of the year, on December 31st.
Oh, really?
So if you're still legally married at December 31st and you get divorced 10 days later, you're still married in that tax year.
Question.
Yeah.
If I am married to Matt, no.
Yeah, that's fine.
Let's say these two people are married, they're filing jointly, and now they're just like, listen, we're both getting divorced, we want to move on. This person says I want to file singly, and this person says I want to file singly. There's no lawsuits, there's no bullshit here, this is not contentious. They just both want to file singly.
Yeah.
Is that allowed?
No.
Married filing separate.
Yeah, but that's not single.
That's not, you're right, it's not single. But you can do married filing separate.
Married filing separately,
Yeah.
but the tax consequences for that are different in some way than single,
It's a high tax rate.
It's a high tax rate?
Yeah.
Yeah, and some don't care. Some are like, I just hate them, I don't want anything to do with them, and I'm gonna go married filing separate, and that's how it is.
That would never happen to us, by the way.
And you and I, no, absolutely
Yeah.
not. Hey!
Ian, how are you?
Speaking
Great.
of,
How are you, John?
I got some,
Good to see you.
we got some bad news for you. Company's taking on some tax liabilities.
Thank you.
You won't be.
Oh, nice.
Should have like a bow on it. Be nice. So what's
There's been
the
a bank
what's the good
error-
news?
Bank error not in your favor. Wyrmwood has racked up $66,000 of tax liability. This is correct.
Yes.
We could just pass it through to the shareholders.
Well, that's what they, oh, no, you can't do that. No.
Why? But then Ian can pay it.
You would
So
also
why aren't
be
we
paying
doing
it.
that? Why are we saying, fuck you, Ian, here's a nice fat tax bill for
I'm telling
you?
you, the states don't want that. They say pay at the corporate level. We're not gonna chase 10 shareholders for our money. We'll get it from the company.
When's this due? Let's just not pay it.
Are they taxing us?
September 15th will be the actual due date.
Shit.
I get it. I get it. Yeah.
They're supposed to bring good news. You're right. Like, hey, it's me. I'm happy. No.
It could have been worse. Could have been worse. California, we saved $60,000 by being able to use the loss by this strategy.
So that could have been
personal returns,
120,000?
non-composite. Yeah, it could have been 120.
Could be worse.
There's some good news.
Could be worse.
I just want to know who's buying all this shit in Kentucky.
Yeah, who are these?
Right?
Kentucky. Leave a if you're in Kentucky,
Yeah, I
leave a
know.
comment. Tell us why you're there.
In Minnesota.